A good education on loan programs may sound like something that only financial professionals should care about, but knowing at least something about your options can help to empower a buyer to find the best deal. Or in the case of USDA loans, it may help you to even know that a loan could be an option for you. You see, USDA loans are possible even if you would have a hard time getting traditional financing. That's because this loan program was designed to help out lower to moderate income people to get a good home. Let's take a look at how the program can help. First of all, and this is a big headliner for this program, USDA has 100% financing. That means that the buyer doesn't have to have a cent of a down payment to qualify for the loan. Some closing costs that aren't covered by the seller could be rolled into the loan with USDA, which is something that other programs don't offer. That means that in many cases, no upfront money is needed to close USDA loans. In addition, the guidelines for this program are a little easier to qualify for if your credit is recovering. The lower limits are still not as lenient as, say, an FHA loan, but they're often lower than equivalent conventional programs. All of these things put together mean that even if you're floating by with just a little bit of extra money at the end of the month, you may qualify to get your dream home. No big savings account needed. Now, of course, there are some limitations on these kinds of loans. A purchase can only have a USDA loan applied to it if it's in an eligible area, which are usually small towns and townships. Click here to check if your potential home is in an eligible area. In addition, despite the name, the USDA program cannot be used on farms, large outbuildings, acreage, or for jumbo loans. This program is for families who need a little help qualifying. It isn't for money-making properties. And on that note, there is one more limitation on USDA loans: income. USDA loans have an income limit for the household. In most cases, being over this amount will mean that USDA will reject the borrower for financing through them. This is to make sure the money is available for those who need it most. USDA loans are best compared to FHA, because both are great when the borrower has limited upfront money. But USDA is a better program for those who qualify for a few reasons. Let's look at some numbers for a quick example. Okay, so the base loan type everyone thinks about is conventional, 30-year fixed mortgages. And if we're talking about a USDA loan, the borrower doesn't have 20% to put down. So let's look at a 5% down conventional program on, say, a $180,000 home. Let's say the borrower has good but not great credit with a score of 690. So, given current rates and all closing costs worked in, the borrower would need $8,968.29 at the closing table. And the monthly payment, with mortgage insurance and all, comes to $1,293.44. But a lot of people don't have $9,000 to drop today, so they're likely to turn to an FHA loan. With an FHA loan, the rate would be a little lower, and the borrower only needs 3.5% down, which brings the amount to the table down to $6,249.13. The monthly payment is better too, at $1,265.80. And this is where a lot of people would stop. But if the borrower qualifies for a USDA loan, let's look at what that situation would be. With the USDA loan, there is no money down at all. You may think that the borrower will have to make up for this no money down in their monthly payments. But that goes against expectation as well, since the monthly payment is the lowest of our examples here at $1,235.19. And this isn't even an ideal comparison in favor of USDA between programs, since the gap widens in that monthly payment difference even more if the borrower has a lower credit score. The benefits of this program should be clear by now. So if you're looking at homes in a small town or township, and you were worried about being able to afford a down payment, think about the USDA program and what it could offer you. Feel free to give us a call if you have any questions about eligibility. Either way, I think we can agree that even knowing that such 100% financing options are available will help to empower you during the home buying process. Equity Resources, improving the lives of families.